Barry, you've been hot and cold more recently, so I'm curious whether you're hot or cold on the market right now.
Yeah, I had been looking for a pullback to occur in the August, September timeframe, and on August 22nd, we decided to downgrade the tech sector. I've been overweighted for some, 11 years, going back to my Barclays equity strategy days. Longer term, my concerns about the technology sector, I've expressed this on the air a number of times. I think that the benefits of the software boom, the cloud, the movement to the cloud, are going to start to move from the producers of that software to the consumers of that software. Healthcare companies, consumer discretionary companies, even industrial companies. You guys had on Honeywell yesterday. One of my old analysts at Barclays used to call industrials the new tech, right? So I think that process is going to occur. I also think the regulatory risk is really building around the sector. If you go back to Jackson Hole, there was a paper by a University of Chicago professor arguing that the diffusion of that technology across the economy is slowed because of the dominance of these winner-take-most companies. You also had at the same time a Princeton professor arguing something very similar. So I sort of looked at that and said you've got both ends of the economic ideological spectrum arguing the same thing. So I think all those risks will grow. I don't think we're in the same situation as the 90s where we'd had a huge build out and we were about to have a technology investment bust. We're not about to have a software bust per se, but I don't expect technology to outperform through the sector. But the thing that really raised my concerns was this increase in volatility in the VIX, in the VXN, while the market was still going up. And it turns out, that was attributable to this speculative demand for upside, calls. Some of that was coming from retail. Some of that may have been this SoftBank whale. And that's really what led to this risk-off event. So from my perspective, what you're supposed to be doing with this risk-off event is buying cyclical sectors like financials and industrials, not so much piling back into tech, because I think tech is going to take some time to work through all the excessive speculation that went on through the course of the summer. So that's how I'm approaching the market from this perspective. Down 10% on the S&P, you should be a two-handed buyer, but not of the tech sector necessarily.
But not of the tech stocks. The great rotation happening right now in front of you, Barry. What about Craig? Are you on the same page or no?
Somewhat. There's parts of the market that are very, very overvalued. At Hodges Capital, the area that we see the most opportunity in, kind of the area where you could leave the country for a couple of years and come back and know that you'll be in good shape, is kind of the housing area. We see a gigantic de-urbanization theme going on out there. A lot driving that, obviously, the COVID and the political unrest and, the restriction by a lot of, city governments. All this is happening at a very time when companies are, for the first time in history, having a giant majority of their employees working from home. And also at the very same time, you have millennials, which are it's 72 million people, the biggest demographic in history. They're starting to move out of the apartments and start families and buy homes. This is all happening with historic low interest rates. And there's a housing shortage of 3 months or so. So there's lots of ways to play this housing theme that we think will materialize over the next 3 years. Obviously, the housing stocks are one, but there's so many ways to play it. There's remodeling like a Home Depot, or building supplies like an Owens Corning, furniture companies like Restoration Hardware that's been so hot here. There's mattress companies like a Sleep Number, outdoor entertaining, mortgage companies like a Rocket Mortgage, or brokerage like a Redfin, home gyms. You talk about Peloton.
So, Craig, but are you buying with both hands at this point? On a week like this week? Are you this Friday?
No, I think having cash, because there's going to be so much. There's so much uncertainty, and I think there's going to be a lot of opportunities out there. And there's no reason to go in with both feet. But there will be some real easy money made in a lot of these areas that are out there that have somewhat been ignored by the market. It seems like the market and most of the investors are really focused on tech and there's not a whole lot of other interests other than the tech area with a lot of people. But slowly but surely, you're seeing the rotation into the areas we feel like I said earlier, you could leave the country and be come back in a handful of years and be well served.